Hi everyone, and welcome back to Module 6, where we're discussing descriptive analytics. And in Learning Objective 4 here within Module 6, we're going to be talking about vertical, horizontal, and DuPont analyses. So we're going to be talking about these things in the data. We're going to be working in Excel as I talk about these topics, all right? So before we dive into the first Excel portion of this objective, let's define horizontal analysis. So horizontal analysis compares between years various line items in the income statement, balance sheet, the income statement and the balance sheet, right? So, or even the statement of cash flows. So we're going to be looking at how, for example, a company's property, plant, and equipment asset balance changed from one period to the next. So between maybe 2020 and 2021. How did it change? What was the percentage change? And then understanding why that change happened. All right. So let's hop over to Excel and I'll walk you through horizontal analysis.
Hey guys, so welcome back. In this video I'm going to show you demonstrate horizontal and vertical analyses. So I'm going to extract this data from the NASDAQ's website. The income statement data is here in table 0. So I'm going to say load up this table 0 data. This will take just a moment. Let's look at the horizontal analysis for the income statement. We have revenue data, cost of goods sold, which they're calling cost of revenue. We have gross profit here. We have operating expense items like research and development. It doesn't look like they have anything. SG&A expense, and all the way down to net income. All right. So this is our income statement, and all we want to do here is we want to compare in a horizontal analysis. Let's make this a little bigger. We want to compare one year to the next. So let's compare 2020 to 2019. The results for 2020 to the results of 2019. All right. So we're going to say, we're going to set up a formula. We're going to say, make this column dollar change, right? So we're going to calculate the change in dollars from one year to the other in this column, and then we're going to say percentage change in this one. Let's give some formatting to this. So we're going to say, let's make it bold, since it's a header. Let's center these, just so it's a little nicer on the eyes. And we'll make these columns a little wider. So first thing, dollar change. I'm going to say, let's compare 2020. I'm going to say 2020 minus 2019. All right. So the change is $780,000. It looks like their revenue was pretty substantial at Tyson Foods. Looks like 43. I think these are in thousands of dollars. So this is pretty significant. So we have a $780,000 change rounded. I'm not sure if it's rounded to millions or thousands. My guess would be thousands, so this would be like a $780 million change. I'm sorry, 700, yeah. In any case, the change is $780,000. Whatever the units are, it doesn't really matter for what we're doing. All I'm trying to do is show you what a horizontal analysis is. So we're going to compare 2020 to 2019, right? And the dollar change is 780. And then we're going to calculate the percentage change. I'm going to say 780 divided by the base year, which is 2019. So it looks like it's about 2%. We'll convert this to a percentage. And it looks like we have 1.8% growth here in revenue. And so we can just copy these formulas and put them wherever we want them. So we're going to want them in these two rows. We're going to want them here. We're going to want them in all of these rows, right? So all I'm doing is Control-C, Control-V. Put them here. And put them here. All right. So this is horizontal analysis. And if you were an auditor, for example, you would come in and you might say, you know, your additional income expense items are up by over 100%. So probably would go to the client and would say, you know, this is kind of a vague label for this stuff. I want to see what's in this account and why it has grown so much. Why are expenses up so much in this line item? It might be an indication that they group things differently this year, or there's a mistake, or you know. So horizontal analysis is kind of like a first pass at looking at the financial statements, just getting a sense for maybe there's something that we need to investigate further, or maybe there's something that doesn't make sense. Okay, so this is horizontal analysis. There's not much more to say about it than that. We're just comparing one year to the other. Generally, people look at both dollar change and percentage change. Another thing that's kind of advanced, but you know, the book won't tell you this, but one thing that you probably will do in practice is like revenue and gains and loss items. You want to have them show up as positive amounts if there's growth, and expenses, you want them to show up as negative amounts if they grow. So for example, expenses, selling general administrative expenses grew to $2,376,000 from $2,252,000. Now that's an unfavorable change. So I would want to show this as a negative number if I were doing this. So I would kind of flip this around. I would say, let's make this 2019 minus 2020. And so now I can see these are favorable changes. This is an unfavorable change, right? So anywhere we're talking about expenses, I kind of do. So this is income. This is income. Earnings before tax. Interest expense. That's one where. Income tax, I want to flip that. That's okay, equity earnings. So my point here is that you generally want to say that this is favorable changes are positive and unfavorable changes are negative. That's how you in practice, this is what we do. We're going to say favorable is positive, unfavorable is negative. All right, but that's it for this. This is horizontal analysis, and in the next video, I'll take the same data and I'll walk you through vertical analysis.
All right, so welcome back. So in the next video, I'm going to be talking to you about vertical analysis. So let's dive into Excel. Let's talk about vertical analysis.
Hey guys, welcome back. In this video, we're going to go through vertical analysis. So I'm using the same Tyson food data that I used in the previous video where we talked about horizontal analysis. And the idea behind vertical analysis is you kind of want to put all the financial statement items in some standardized format so you can compare across companies and across years. So, for example, in the income statement, I'm going to want to state all of these line items as a percentage of total revenue. Okay. So let's do this for 2020, 2019, 2018, and 2017. And we're going to say 2020 is going to be equal to 2020 divided by 2000. Percentage terms. Let's see what this looks like when we pay. Absolute reference, right? We're going to add dollar signs in here. Let's change this one. And actually, I want to copy this across the columns, so I'm going to take the absolute reference off of column B. And so I'm just going to take the B off, and I'm going to say, alright, that's what we're doing. Okay. Now I'm just going to copy this formula, we're going to apply it everywhere. Put it here, put it there, put it there. And so now we know, for example, gross profit is 12.5% of total revenue. And we're talking about a poultry company, so I don't know what gross profit normally is for these types of companies, but it looks like they have small margins. 12.5% gross profit. Selling, general, and administrative expenses eat up another 5.5% of revenues, and it looks like they pick up some operating, actually this is all, it looks like maybe they pick up some tax benefits here, and they end up somewhere around 4.8% net income. So net income, the revenue is about 4.8%. Okay, so when it's all said and done, that's what they have left over in net income after they pay all their expenses. So we can do this, we can take these formulas and just carry them across. And so now if we did this correctly, we should be pulling from the appropriate years. So we have 2019 here, 2018, 2017, so we're good. It looks like their gross margin has bounced around a little bit. Back in 2017, they were at 13.2, they dropped down to 12.7. down to 11.8. It looks like they rebounded a little bit here in 2020. SG&A has been pretty consistent across the years, and interest expense looks like that's been relatively consistent, somewhere around 1%. And so this is vertical analysis. We're going to state everything here in terms of revenue. We're going to do it for every year, and then we can look at these percentages across the years to see what's changed. All right, well, this concludes the video on vertical analyses, and I'll talk to you soon.
All right, so welcome back. We just discussed vertical analysis, and before that we talked about horizontal analysis. So now let's move into our last part here in Objective 4. Let's talk about DuPont ratio analysis. And so DuPont ratio analysis summarizes and disaggregates the company's performance measured by return on equity into 3 ratios. So we're going to be looking at profit margin, asset turnover, and financial leverage. All right, so let's get into Excel and let's talk about return on equity. See you in a minute.
All right, guys, welcome back. In this video, I'm going to be showing you how to perform DuPont analysis, and it's actually very easy. It's really the interpretation that you can get from the analysis that's is useful, but actually the mechanics of it are very pretty simple. So what we're going to do is we're going to basically calculate return on equity, but we're going to split the return on equity calculation up into different parts. And this was a process made famous by the company DuPont. It's what they used internally to evaluate their own performance. And the idea is that you can think about return on equity. Return on equity is a function of, so we're going to say ROE is a function of profit margin. Before we get into the components, let's say return on equity is basically net income divided by total equity. But what they realized that DuPont is they can split this calculation up into parts. And so you can say ROE is equal to profit margin multiplied by asset turnover and think about how you calculate profit margin. Profit margin is going to be net income divided by sales, and asset turnover is going to be sales divided by total assets, and financial leverage is just going to be total assets divided by total equity. So what they realized at DuPont is that if you want to evaluate the company's performance, one way to do it is look at return on equity. Return on equity measures how much profit is being generated using the investment from the share. Well, what's driving good or bad return on equity. So if we think about return on equity as being composed of profit margin, turnover, and leverage, you can then assess, like, is the company not hitting their return on equity target because their profit margin's not good, or are they not generating enough sales from their assets, or maybe they don't have enough debt, maybe they're not leveraging debt enough, maybe they could generate greater return for the shareholders if they used more debt, right? Because this is being multiplied here, right? The more leverage that you employ in running your business, the greater you can increase your return on equity. So it works the opposite way. So if you perform pretty poorly and you're highly leveraged, it's going to decrease your return on equity. But you can always boost your return to shareholders if you increase leverage and execute on profit and on asset turnover. But that's the idea. We're going to basically calculate these ratio components for Google. So this is Alphabet for the years 2012 through 2017. I have these reversed. I have the most recent year up top. So we're just going to dive in and start calculating this stuff. So I'm just going to set this column with the 1, kind of show where my calculations are starting. Sometimes I like to use the color here just so I can visually see where the original data is and where I started calculating things. So the first thing I want to calculate is profit margin. And then I'm going to calculate asset turnover and financial leverage. So everything looks nice. I'll do the formatting here. Alright, I'll adjust these widths again. So we're going to say profit margin is going to be equal to net income divided by sales. We got 11.4% profit, and asset turnover is going to be sales divided by total assets. Assets here, so we got asset turnover of actually asset turnover is not usually stated in percentage terms. And same thing with financial leverage. We're not going to state that as a percentage, so we'll use a similar formatting here. So we're going to say financial leverage is assets divided by say return on equity, ROE, is going to be this multiplied by this multiplied by that. So 8.3% return on equity here. Just format this a little nicely. And so we can see that our 3.3% return on equity is being, it's composed of an 11.4% profit margin, 0.56 asset turnover rate, and financial leverage of 1.29. If we did this correctly, we should get the same exact value if we do net income divided by equity. Looks like we do. So if I copy this formatting, we get the same exact value. Right, so it looks like we did this correctly. Now that we have the first row right, I'm just going to copy these formulas down, and we can see that Google has had a decreasing return on equity here over time, and it looks like it's primarily driven by a really weak profit margin in 2017, because you can see profit margin is pretty flat 2012 through 2016 and then kind of falls off a cliff in 2017. So I don't know what happened there. And then we have pretty consistent asset turnover pretty consistent financial leverage. So, I mean, if we were analyzing this, we would want to go investigate, why did Google's profit margin fall in 2017? And, this would be the start of some type of deeper analysis. So some statistical technique that we use to identify like an anomaly or an outlier or a unique feature in the data, and it allows us to focus our attention on what we need to focus on. So this is the video on the DuPont ratio. Hopefully you found it useful, and I will talk to you all soon.
All right, welcome back. So we just went through our DuPont analysis, and this concludes Learning Objective 4 here in Module 6, where we're discussing different descriptive statistic concepts and techniques. And so we'll move on to the next topic in the next video, and look forward to seeing you then. Take care.